Hello there, in today's video we'll be comparing Simon Property Group with Federal Realty Investment Trust to work out which one is the better investment at this point in time right now. This is a video that was requested in the comments of a previous video I made, which was AMD versus Intel. If you're interested in seeing that video, I'll put a link up there and in the description down below. If you would like me to review any other stocks or compare two stocks, particularly dividend investing stocks, that's what I'm particularly interested in, stocks that pay dividends, please do feel free to leave me a comment down below and I'll add that to my list to review. This is going to be the exact same format as my previous versus videos, so I will be looking at the balance sheet, the income statement. We'll of course look at what the companies actually do, and then at the end of the video I'll also go through a little bit further in-depth research so you can see some more of my behind the scenes stuff, as well as my own opinions on whether I'll be buying, selling or holding these stocks and at what prices I'd be looking to do so you can see my forecasts for the future as well. If you're new to this channel, welcome. My name's Andy and on this channel I like to talk about money and success. If you're interested in making, saving or investing money, please be sure to hit that subscribe button down below, hit the notification bell, and then you'll get notified every time I release a new video. And if you're interested in this kind of content and you found this useful, please do remember to give it a thumbs up because that helps the YouTube algorithm, which in turn helps me, and of course I do appreciate that. So let's start by looking at what the companies actually do. We will at each stage stop and we'll put the scores, and as I did in my previous ones, we'll give a score to the winner of each round so that you can see the scores as we go along through this video. So let's dive in and get on with it. So Simon Property Group, essentially they are a REIT, they manage malls. Both these companies are REITs, but this specialises in big shopping malls, indoor shopping centres, outdoor shopping centres, but that is what they really specialise in. The next slide I'll be showing you will be coming from this Q3 of 2020 supplemental presentation, and it's this slide here that I really want you to pay attention to. You can see almost 80% of their income essentially comes from US malls and premium outlets. The 8.8% of international is also from shopping malls or shopping centres if you're over here in the UK. So that's basically 90% of their income coming from malls. Whilst in their write-up they do say that they also have mixed use, it's a very, very small percentage that is mixed use. This is specifically really a shopping mall company. They own shopping malls, they rent the shopping mall spaces, and that essentially is what Simon Property do. I don't feel any need to go any really deeper into that. So Federal Realty Investment Trust investor presentation, you can see here on your screen now. This gives you an idea of where they are located, and the key thing to remember here is they've had 53 years of consecutive increases in annual dividends. So you can see back in 1967 it was a 12-cent dividend, and in 2020 it's a $4.24, and you can see the rise there. So you can see the diversification of their income stream. So you can see they've got 11% residential, 10% office, 9% grocery and drugstore, and so on. So you can see it's a really good breakdown there. So these really specialise in mixed use centres, whereby they'll quite typically have residential above, they'll have a shopping centre, there might be a cinema, and it will be a mixed use venue, if you like, rather than, whereas Simon Property Group, SPG, it's shopping malls. With FRT, Federal Realty Investment Trust, they are mixed use. So they will typically have a grocery store, so people will come to use the big grocery store there, but then as well as the grocery store, they will also have other things as well. This slide here shows you 35% are mixed use urban, 24% are grocery anchored, 25% are super regional, 11% power centered, and 5% at the Grove at Shrewsbury. So this gives you a good idea of the mix of use. It is not just shopping centres. So for business risk, I'm going to give this to Federal Realty Investment Trust, FRT, as you can see here, really because it's got a better spread and I think that makes it safer. I also personally am not that bullish on shopping malls. It's not that I've got anything against shopping malls as such, but certainly recently here in the UK we've had the Arcadia Group go down, John Lewis have been in trouble, Debenhams has just gone into administration, so a lot of our big retailers here have gone into administration. And whilst I appreciate that it's not the same in the UK as it is over in the US, SPG do have exposure to the UK market as well as here in the UK. Just so you know, if you're from outside of the UK, the local councils basically have had somewhat of a war on the high street for years. They won't admit to this, but it is true. They've increased business rates absolutely massively. They've made parking so you have to pay to park everywhere. If we went back 20 years, it was free parking. That forced people out of the town centres. That killed a lot of the high streets in the UK, which is why many of them are now bars and whatnot. Of course, they blame it all on the internet. Now, I'm not saying the internet didn't play a part. Of course it did. But when you have to pay £5 to go and park to do some shopping, you're not going to stop and have a coffee as well as, so you just close everything down basically. What happened then, we had the shopping centres that went really well. However, say for example Milton Keynes Shopping Centre, which is one of the biggest shopping centres here, that one when it opened had something crazy like 15,000 free parking spaces. Now you can't get a single free parking space there. So if you go to the shopping centre, you go very quickly to go to the one store you want to go to buy what you want to buy to come home again. You don't tend to go to browse like you used to, and that in turn is killing the shopping malls as well in the UK. So now in the UK over here, the model we're going to is out of town retail parks where the councils don't own the parking, the shopping centres own the parking, and as a result of that they're still free. Now it might be in America that there is a different system and the parking is owned by them, in which case the shopping malls in America are going to be a lot safer than the ones over here in the UK where the council have anything to do with it and are able to charge essentially a tax for parking and going shopping, which forces people online. So sorry for the little rant there, but that's how it's going over here, unfortunately. And I hope somebody realises that and it starts to turn around, because it is a shame, because we're seeing a lot of retailers go out of business as a result of excessive parking charges and massive business rates. I actually owned a shop for a little while myself on a high street in the UK, and I can tell you now, my business rates were higher than my rents. They never tell you that on the TV. They always, if you watch our BBC, they will always say, "Oh, the rents are so high, the business rates were higher." I'm telling you, and at least I got something for the rent. I got the building. The business rates, the council gave me nothing. So from a business point of view, it's a hard thing to do to run a shop in the UK. And I'd like to say, I don't know what the setup is in the US. Hopefully it's not as bad as it is here for the shops, and in which case, and I suspect it's not, because I notice they have a lot more square footage per capita of shops in the US. So I would suspect, therefore, the rates are lower and the parking is free. I know certainly the gasoline, what we call petrol diesel, is cheaper in the US than it is here in the UK. So I think it maybe is a much more car-friendly place. People can get to and from shopping centres cheaper. So in that respect, it's safer. But I do still feel that the diversity of mixture from Federal Realty Investment Trust over the one type of model that Simon Property Group have got does give it an edge on business risk and makes it that little bit safer. I appreciate during this whole pandemic, both of these companies have suffered. Both of these companies have had their clients closed down. Federal Realty Investment Trust, for example, rents to cinemas and gyms. Well, of course they've closed, as well as renting to shops. But it's residential things. It still had the grocery stores have been able to stay open. It still had the people who live in the apartments paying rents. So it's had that defensive proportion of the portfolio as well, which is why I've given this one to Federal Realty Investment Trust. So let's here look at the 12-month chart for Simon Property Group. As you can see, it fell off a cliff in March, as did the entire stock market. Now you can see that the current share price is down 37% from what it was a year ago. It's actually down 33.85% from its current 52-week high. You can see the price to FFO is 10.12, which is very attractive. It's got a dividend rate of $5.20 and a dividend yield, very attractive yield there, of 5.54%. I just want to point out the market cap of Simon Property Group there is $35 billion. So it's a big company. If we look here at the Federal Realty Investment Trust 12-year chart, so the same chart, you can see over the 12-year term it's down 28.9%. It's actually down from its 52-week high by 26.86%, so not down as much as Simon Property Group. It's got a dividend rate of $4.24. It's got a price to FFO of 20.40, so not as attractive as Simon Property Group on a price matrix like that. And its dividend yield still attractive at 4.55%, but not as attractive as Simon Property Group. So if we look at the comparison here, we have to give the price to FFO to Simon Property Group, because obviously 10.12 is essentially half the price of Federal Realty Investment Trust. The dividend yield, again, Simon Property Group takes that one easily, giving about a 1% better dividend yield. So you're getting a 1% better return in terms of income on your dividend there. And the share price, well, it's dropped 33.85%. So assuming it goes back to where it was, it's got further to go up, which means we therefore have to give that one to Simon Property Group. So really, it takes a clean sweep across that round. So now let's check out the income statement. So we'll start with Simon Property Group, and you can see the income there, the total revenue has stayed fairly level. It's increased slightly between 2015 and 2019, but in the current trailing 12 months is actually down at 4.95. And bear in mind, this is billions because it's 4,958 million, which is obviously $4.9 billion of trading revenue there. The operating income has gone from 2.6 billion up to 2.8 billion in 2019. It peaked in 2018 at 2.9 billion, but has dropped back to 2.2 billion in the current trailing 12 months. Just want to quickly look at the FFO per share. So we've got something that can give us a comparison. So the FFO per share, you can see there it says diluted next to it. The FFO per share in 2015 was $9.86 per share. It increased to $10.49 per share, increased to $11.21 per share, increased to $12 in 2018, dropped back just a little bit in 2019. In the current trailing 12 months, you can see there it's dropped back to $9.91 per share. If we look now, same metrics for Federal Realty Investment Trust, you can see that its total revenues in 2015 was 745, and they increased to 801 in 2016, 856, and this is again in millions in 2017. Total revenues are a lot smaller than that of Simon Property Group, but it's about 1/5 of the size. The market cap of Federal Realty Investment Trust is about 7 billion, whereas if you look, it was 35 billion for Simon Property Group. So this is about 1/5 the size. So that's why its revenue is substantially smaller. In real terms, it's comparable. So it grew there from 745 all the way up to 933 in 2019. So that was a really nice growing trend. It has fallen back in the current trading 12 months. Its operating income has stayed fairly level, which is, you know, a more important metric really than the total revenue, because this takes into account some of the expenses coming out as well. And you can see that's fallen back again in the trailing 12 months. The net income was climbing nicely, peaked in 2017, went down in 2018, then went high in 2019, which is nice to see, but then has virtually halved in the current trailing 12 months. So that's kind of up and down there. And if we just look at that FFO per share figure, you can see it's $5.05 per share, increased to $5.65, increased again to $5.74, increased again $6.23, increased again $6.17, and then decreased down to $4.97 per share. Like for like, that's about half of what it was for SPG. So I'd say that's quite a close call, to be honest with you. You have got a little bit more growth in terms of revenue growth from the point of view of Federal Realty income, although I would describe it as roller coaster-ish. It was up and down, but the general trend was up. However, I'm going to give this point to Simon Property Group because it's funds from operations on a per share basis are higher, almost double what they are for Federal Realty Investment Trust. And obviously as a shareholder, when you're thinking about getting dividends in, you want to know that the money is there to pay the dividends. And with Simon Property Group, it's got that little bit more coming in than Federal Realty Investment Trust has. And so on that metric and on that basis, I'm going to give that just slightly to Simon Property Group. But you could have taken a view on that and given it a draw if you'd have wanted to. I'm not saying either of those were particularly bad. Considering what's going on in the world, I'd say they're both perfectly acceptable and there wasn't a lot in it. But I am on balance going to give that point to Simon Property Group. You can disagree with that or agree with that. That's entirely up to you. You can, adjust the score at the end yourself if you want to. So now let's look at the dividend safety. So this is taken again from the income statement. Here we're going to compare the revenue per share to the dividend per share. So let's have a look at them lines now. So this is for Simon Property Group. You can see the revenue per share at the top there, and you can see in 2015, it was $16.96 per share. It then went up to $17.38, carried on climbing right up until 2018, so that's a good sign. And then in the current trading 12 months there, it's dropped back down to $16.19 per share. And if you look at the dividend per share, you can see the dividend per share back in 2015 was $6.05. That increased to $6.50 in 2016, increased again in 2017, increased again in 2018, $7.90, increased again to a really juicy $8.30 per share in 2019, and then has been cut. And now it's at $6.80, so they've cut it down. So they've kept that well within what they can afford by cutting it back. Not that it was particularly looking unaffordable, so I don't know really what the reason for that was, because as you can see, they had the revenue coming in to be able to pay it. So I fully expect they will be increasing their dividends again at some point in the future. They're obviously playing it very cautious at the moment. Federal Realty Investment Trust, their revenue per share there at the top line, you can see $10.83, and you can see that increasing there all the way up to 2019. And again, they've dropped back, but they haven't dropped back as much as Simon Property Group did in the trailing 12 months, so that's a good sign for them. And their dividends, you can see their dividend there, $3.62 back in 2015, $3.84 in 2016, $3.96 in 2017, $4.04 in 2018, $4.14 in 2019, $4.21 in the current trend 12 months. So not increasing it as quickly, but they've never dropped it. They've kept increasing it, albeit only slight increases. It has continued to increase. So on Dividend Safety, I'm actually going to give that a draw, because Simon Property Group, they grew their dividend faster. So had you held it over that period of time, you would have made more money on dividends with Simon Property Group. But on the flip side, in the current year, you would have suffered a big pay cut with Simon Property Group because they've cut their dividend. That said, they've got the cash flow there to be able to reinstate the dividend, so I don't think it's an unsafe dividend. I personally think it's one that's going to come back, and you can't falter Federal Realty Investment Trust. They've been run very, very prudently. They've given continual small dividend increases, and my belief is they will continue to do that. That's one of the things that we went and looked at their investor presentation page earlier, it actually, they're very proud of the fact they've given 53 years of consecutive dividend increases. They're a dividend king. I made a video about that. If you're interested in dividend kings, I'll put a link up there and in the description down below. They're unlikely to ever cut their dividend. They've got, you'll see in a moment, they've got plenty of cash in the bank. They've got plenty of coverage, as we could see there. So they've got to get a point. But by the same token, I think it'd be harsh really to penalise Simon Property Group at this point in time, because they do have the coverage. So I'm giving them a point as well on that metric. But again, that's one where you could take that point off Simon Property Group if you wanted to, on the basis that they've cut a dividend once. So what's to stop them doing it again? That is a view to take. But I think the reason they've taken that and they've done that is for the same reason as I didn't give them the point in the business risk. So I've already deducted that point, because I think their business model is more risky, and they've looked at it and gone, oh my God, lots of retailers are at risk of going out of business. If the retailers go out of business, we won't have the rents coming in, and that's going to jeopardize us. So we won't stop our dividend completely, we'll just reduce it down to preserve some cash. And that's what they've done, and that's prudent, and I'm not going to knock them for that, which is why I'm giving them both a point. I think you're going to get dividends for years to come from both of these companies. And I genuinely think that Simon Property Group will reinstate their dividend. Maybe not this year, maybe not even next year. It won't get reinstated as high as it was. I mean, they're still paying dividends. I'm saying reinstated, but as in brought back to the previous levels. But certainly within the next 5 years, I believe they will. And when they do, the share price will go up. And like I say, if you stay till the end of the video, you'll see my projections on the share prices for both of these companies. So you'll see where I foresee them going myself and what my opinions are on that. So we'll go through that later. So now let's take a look at the assets versus the liabilities. So Simon Property Group, total assets, and this is in millions. So these are billions, obviously. And Federal Realty Investment Trust, you can see there. And the key figure that we're interested in is the asset versus liabilities ratio. And what you're looking for is for that to be a number greater than 1. They're both greater than 1, so that is good. However, Federal Realty Investment Trust, ticker symbol FRT, is 1.5, which is substantially better than the 1.09 showing that Simon Property Group is putting in, which is why that point has to be given to Federal Realty Investment Trust. From that point of view, it's a much stronger company in terms of the assets to liabilities ratio. And maybe that's the reason that Simon Property Group did decide to reduce its dividend, because it knew its balance sheet wasn't quite as strong as a balance sheet like Federal Realty Investment Trust. Speaking of which, let's look at balance sheets. So now let's look at the balance sheet for Simon Property Group. First thing we're going to look at here is the line that says total real estate assets. You can see in 2015 it had 23 billion worth of assets. That increased 24 billion in 2016 and stayed fairly level there ever since, and has dropped in the current trailing 12 months down to 23.8 billion. The next thing I want to look at is the total assets. So there's the total assets. It was 30 billion back in 2015, and it's bobbled around the same kind of level, and it's slightly higher now at 31.6 billion in total assets. Now look at the total liabilities at the bottom of the screen there. In 2015 that was 25 billion, and that has increased up to 29 billion in the current report, and it was increasing anyway. In 2019 you see the liabilities there increased to 28 billion, which is a 4 billion increase from 2015 to the current report. Now let's look at Federal Realty Investment Trust. So the exact same metrics we're looking at there. The total real estate assets back in 2015, 4.4 billion, and you can see it increased in 2016 to 4.9, increased to 5.7 in 2017, increased again in 2018, increased again in 2019, and I'm really pleased to see there it's increased again in the last report to 6.3 billion, which you'll note is almost 50% increase on what it was 5 years ago. So this is a company that is actively growing its assets and obviously selecting them very well because they are going up in value, which is an excellent thing to see. Now let's look at its total assets and obviously its total liabilities. So its total assets in 2015 were 4.8 billion, and again you can see the trend there is generally up, and they've almost doubled to 7.7 billion in the last report. And total liabilities, they've gone from 2.9 billion, and yes, they've been increasing, and they've increased to 5.1 billion, but they haven't increased at the same pace that their assets have increased. So I think it's very fair to give that one to Federal Realty Investment Trust because they've been growing their assets much faster. Yeah, sure, their liabilities have grown as well, but not at the same pace that their assets have been growing. Whereas Simon Property Group, it was staying pretty stagnant whilst its liabilities were going up. So the value was staying the same, but the liabilities were increasing. So the actual value, if you like, the equity in between, was diminishing as a result of that. So now let's take a little bit more of an in-depth look into the dividend. You can see 5.54% dividend yield. We've discussed that already. Payout ratio 56.05%, very low, but bear in mind they have just cut their dividend, which is why that is so low. They are obliged to pay out higher because they are a REIT. If you want more information about REITs, please do check out the link I'll put above and in the description down below to my video that explains what is a REIT, and then you'll understand why REITs need to pay out more than other shares do and why the payout ratios tend to be higher. Their 5-year growth rate is 10.68%, and they've had a dividend growth of no years at all. And here's the reason the dividend growth rate was no years at all. It's this cut right here in mid-2020, and you see they have maintained it since cutting it, but you can see their long-term trend. So you can see they have in the past cut the dividend and then relatively quickly brought it back. You see they did this in 2004. They dropped the dividend there, dropped it again, but then look, it recovered to a higher level than it was previously at. This then happened again back in 2009 and again in 2011, but again brought it back at a higher level. So this is a pattern with Simon Property Group. That is simply what they do. Whereas, let's look now at Federal Realty Investment Trust. So here you can see 4.55% dividend yield, 92% payout ratio. Again, don't worry about that. The 5-year growth rate is 4.64%, so not as high as Simon Property Group, but the dividend growth, it says 28 years. This is because this website always gets it wrong. It's 53 years. And here is the dividend chart for Federal Realty Investment Trust. As you can see, it just goes up and up and up and up and up. They did have a couple of blips here, but even despite those blips, though, that year was more dividend paid than the previous year. So this is 53 years of consecutive increasing dividends every year. Any 12-month period was higher than less. And you can see that typically they wait 4 months and then they increase the dividend. And this is what they do. Only by a little bit, mind you. Look, it's just a few cents, but they are increasing it, and that's been the case back since, I was going to say, the beginning of time. It feels like that, folks. If you're under 53, it's the beginning of time to you. So yeah, so dividend growth rate, we're going to have to give the dividend growth rate to Simon Property Group. Despite them cutting their dividend lower in 2020, they have had a 10.68% growth rate versus 4.6% from Federal Realty Investment Trust over the past 5 years. Dividend growth for years, though, obviously Simon Property Group did just cut their dividend down, so that means they can't possibly win that, whilst Federal Realty Investment Trust have increased their dividend for 53 consecutive years, which gives it an easy win for them. Okay, so here's the analyst forecast for Simon Property Group. Overall, they're giving this a hold. you can see that their prediction over the next 12 months on average is a downside of 19.6%. We've got 5 analysts offering opinions on this. None of them are giving it a buy, and none of them are telling you to sell it. 5 of them are telling you to hold it. On average, think it's going to be worth $75.50 per share. The forecasted high is $82 per share, and the forecasted low is $68 per share. Bear in mind the current share price is $93.91 per share, so they're not exactly bullish on this stock. So here's the analyst forecast for Federal Realty Investment Trust, ticker symbol FRT. You can see 6 analysts have reviewed this, and they have this as a moderate buy. 2 of them are telling you to buy it, 4 of them are saying hold it. But again, they've got a downside on it. The average share price that they're predicting is $86.83 in 12 months' time. The high is $101 per share and the low is $75 per share. Bear in mind it is currently trading at $93.10 per share. So that's a downside of 6.73%. So that brings us to the final scores. Obviously, the analysts really gave that one to Federal Realty Investment Trust because the downside is much smaller than the downside for Simon Property Group, but they're not exactly bullish on either of these at the moment. The total score, therefore, is 6 to Simon Property Group and 6 to Federal Realty Investment Trust, which makes it a draw. So now we'll go and have a look at some of the behind the scenes bits, some of the things I look at in more depth on my more detailed spreadsheets. I've pulled them out for you so I can go through them with you. Then I'll be going through my own forecast and letting you know where I think things are going over the next 5 years or so, broken down by year, so you get an idea of my thoughts as well. So value analysis is one section of my spreadsheet that I look at. So you can see I've compared the 52-week high, 52-week low, and the current share price, because I like to see, you know, where they are. So you can see its 52-week high to low drop for Simon Property Group was actually 70% off its high, whereas Federal Realty Investment only went down 50%. I mean, I say only, 50% is still a big drop, but it's not as big a drop as Simon Property Group. And you can see the current share prices are very similar at the moment, yet Simon Property Group's 33.85% off its 52-week high, and Federal Realty Investment Trust is 26.86% off its 52-week high. I like to put the P to FFO side by side, and that very clearly points out that at the moment Simon Property Group is the better value buy on that metric. Then I look at other key metrics there, so you can see the total assets, and obviously you can see the total assets, how much bigger Simon Property Group is than Federal Realty Investment Trust. You can see the number of shares. Obviously there's a lot more shares out for Simon Property Group than there is on Federal Realty Investment Trust, and so there I've calculated the net intrinsic value per share, and that's the per share figure there you see. So the net asset value for Simon Property Group per share is $8.30, whereas for Federal Realty Investment Trust it's $34.08, which would actually mean on that metric Federal Realty Investment Trust is a good buy. Now, if you ever see a stock whereby the net asset value like that is higher than the price of the stock, it's a very good buy. You should buy it almost certainly, unless there's something wrong with the company, like it's making no money, because even if its assets were all sold off, that would more than cover the shareholders, what you've bought the shares for. You're essentially buying the company at a discount. So it's very rare to see a stock price lower than the net asset value, but it's a good indicator and something I think nice to look at there, which is why I have that on there. And then you've got the book value per share, which I take from Yahoo Finance. According to them, Simon Property Group, it's $5.59 per share versus Federal Realty Investment Trust, which is $28.66 per share, which again would indicate actually that Federal Realty Investment Trust is slightly better value, well actually slightly a lot better value than Simon Property Group, based on its assets, of course, its book value. Funds from operations, the FFO, you can see the size difference there of Simon Property Group to Federal Realty Investment Trust. It's interesting to see that whilst the assets of Simon Property Group are about 7 times, the income's almost 10 times as much. The FFO to liabilities is a very interesting metric I like to look at, because this tells you how many years it will take the company to pay off all of its debts using its current funds from operations. So you can see actually on that metric, Simon Property Group wins, because Simon Property Group could pay all of its liabilities off using its funds from operations in a little under 9 years, whereas it'd take 13.5 years for Federal Realty Investment Trust to do the same thing. But then on the balance sheet side of things, you can see again, Federal Realty Investment Trust is much stronger because it has 1.5 coverage versus 1.09 coverage for Simon Property Group. So you can see how it really is a mixed bag, and that's why you can't just take one factor and decide that that's it, that company is the best, because as you can see on this one sheet here, you've got metrics whereby one is a clear winner and then other metrics the other one is a clear winner, which is why you have to look at more than one metric when you're analysing a stock. So profit analysis, these are other metrics that I look at here. You can see the total revenue, the net income, and then I like to look at the net margin, so the profit margin this is, and you can see actually Simon Property Group actually has a better profit margin than Federal Realty Investment Trust, and you'll see I've got it calculated there, and then I also have it taken from Yahoo Finance. Sometimes Yahoo Finance disagrees with my calculations, which is why I like to do my own calculation on my spreadsheet, because I like to know that the numbers are correct, and if someone's made a typo on Yahoo Finance or something, I like to know that. So if there is a discrepancy, and that's why I have that there both, but in this instance I've calculated the same as the people at Yahoo Finance has, which is reassuring, I suppose. Operating margin, this is taken from Yahoo Finance. Again, you can see Simon Property Group is higher than that of Federal Realty Investment Trust. The return on assets, again, as Simon Property Group are more profitable in that respect. Return on equity, Simon Property Group win hands down on that, and EBITDA, which is earnings before interest, tax, depreciation and amortization. You can see the size difference of the two companies there. Okay folks, so now the sheet you've been waiting for, I suppose. So these are my views. Now bear in mind, these are just my best guesses. I do not have a crystal ball. I do not know for a fact what the share prices will do, but this is my opinions on where I think the stock prices are going. Full disclosure now, I own both of these stocks, so I do have shares in both Simon Property Group and in Federal Realty Investment Trust. I have a much smaller holding in Simon Property Group. It's actually one of my smallest holdings, to be honest with you. I have a much bigger holding in Federal Realty Investment Trust. I actually invest in Federal Realty Investment Trust just after making the comparison video, Federal Realty Investment Trust versus Realty Investment Trust, the monthly dividend company. I'll put a link to that up there and in the description down below if you're interested in that one, where I compared, and that was one of my very first versus videos, which is very similar to this one. So I am quite bullish on Federal Realty Investment Trust, but at the current price levels, I think it's a little bit high. It's above my current buy price, so I'm not buying it right at this point in time. That's not to say I think it's a bad value, because I think if you hold it long enough, as you can see on this spreadsheet here, holding long enough and either one of these will make money over the long term. And of course you've got dividends that you will be getting on these as well. But personally, Federal Realty Investment Trust, I like to buy it if I'm getting a 5% dividend yield or better, which means you've got to buy it below $84.80, as you can see on the right hand side there. Simon Property Group, on the other hand, if you're happy with a 5% dividend yield, it's already a good buy for that kind of dividend yield income. It's not something I'm as bullish on, that's all. But by the metrics on my forecasts on paper here, you would think that I'm a lot more bullish on Simon Property Group. You can see that I've got it forecast within 5 years to be making about 65% capital gain, and obviously you'll be picking up a bigger dividend in the meantime than that of Federal Realty Investment Trust. But bear in mind, I bought Federal Realty at a much lower price than it currently is standing now, so my dividend yield is much higher on Federal Realty Investment Trust because I bought it at a much lower price, and I bought a lot of it at that price as well. So these are my forecasts. I basically think in the next 12 months we can expect things to pretty much bobble along. I've actually put them for them to go down, both of them to go down slightly. That's not to say that they will. I know the analysts said that they're going to go down to lower than what I've written there. I don't know, but it's all going to depend on how the next 12 months pans out. If we get more shops going under, if cinemas close, that could hurt these companies. Cinemas closing, for example, will reduce the share price of Federal Realty Investment Trust. Whereas department stores closing will hurt the price of Simon Property Group and to some extent Federal Realty Investment Trust as well. So if the vaccines go wrong, for example, we just need some bad news. At the moment, everything's on good news. We've got vaccines coming out left, right and centre. They're being rolled out. Everything is good news at the moment. So you've got to remember that with the stock market, in the short term, it really is on sentiment and feelings, if you like. And at the moment, people are feeling positive, and so it's kind of shot up. But over the long term, things go on valuations, and I can't predict between now and the next 12 months what the feeling is going to change. And I do think there's going to be fluctuations in feelings. You know, we could get some bad reports out from some companies. All kinds of things could go right or wrong in the world, and as a result of that, stock prices could go up and down. So in that short term, I do think, you know, I can't be sure what it's going to be at all. I mean, I can't be sure long term, but I can be more sure long term. Long term, I think both of these companies' share prices will go back up. I think in 5 years' time, the pandemic will be forgotten about. Shopping centres will be doing kind of okay again. They're not going to be back to their heyday. You know, I don't think they're necessarily going to be booming like they were in their heyday, but they'll certainly be a lot better than they are now. And certainly we can get back to 2019 levels. I don't see that as unrealistic. So in 5 years' time, share prices for both these companies are going to be much higher than they are now. As you see, 65% gain for Simon Property Group and 41% gain for Federal Realty Investment Trust. So anyway, that's my thoughts and opinions on this. I hope you found this useful. I hope you've enjoyed it. Thank you so much for watching, and bye-bye.